But let's go back to a story that, in fact, Manglam was talking about just a while ago. Paytm being perhaps in talks for a potential deal for the sale of its entertainment business with different entities. And one of those entities perhaps could be Zomato. This is, of course, as per reports. Now, Zomato could be planning to buy Paytm's entertainment business in a deal size of 1,500 to about 1,900 crore rupees. To talk about the potential implications of this, we have Karan Taurani of Elara Capital joining in. Karan, good to have you on. So interesting development coming in here. And I was looking at the properties, to understand what comprises Paytm's entertainment business. And then, Manglam reminded us that it does have marquee properties like Insider and, a couple of these big events, lifestyle and culture events, music and food events that do draw in a fair amount of crowd. The question is that do you think it makes sense for Zomato to be spending somewhere between 1,500 to 2,000 crores to snap up these properties?
Hi, Surabhi. Good morning. So I think if you look at the events business per se, I think it's quite an attractive business. The market growth is, about more than 20% odd. Zomato already has a presence in this business. They make revenues of close to about 450 crores in the live business. So I think they want to potentially, scale up this business, and the acquisition of Paytm would be more, pertaining to that. Now, in terms of, making sense, I think it all depends in terms of what kind of valuations they're asking for. So if the numbers were to be believed as per report of 1,500 to 2,000 crores, and I think that's a fair valuation, because if you look at Paytm's live revenue as per reports, it's been in the range of about 1,600 to 1,700 crores. So you're buying this at about 1x trailing revenues. So I think that is kind of attractive. Also, I think to add the point here, Zomato has kind of acquired companies in the past and has seen a turnaround. So, for example, if you look at Blinkit, for that matter, they acquired Blinkit at close to $600 million, and today Blinkit's valuation is somewhere close to about $7 to $8 billion on a forward basis. So I think we have seen Zomato acquiring these kind of companies, doing a turnaround kind of a thing. Plus, what it gets here is also a user base. So we can't forget the fact that Paytm Live has got an existing user base, which will help fill up Zomato Live user base as well. So I think it's a good strategy. How they execute it, how the turnaround happens is a key monitorable from here on.
So I think they're also trying to grow their going out business, right? Which Karan has a revenue currently of around 260 crores annually. How much do you think this deal, if and when it goes through, can add to the going out business? What kind of growth are you looking at there?
Yeah, so as I said, on annualized basis, for FY24, roughly the live business is about 400 odd crores. And if they were to acquire Paytm Live, you could see the number, touching about 2,000 crores. Now, in terms of, overall revenues, currently the live business is a very small part. And even if they were to acquire it, it's not going to have a big positive impact in terms of the revenue as well. So I think revenue scale is not something which will happen on a console basis. We will not see massive revenue upgrades. But the monitorable here is in terms of the profitability and the losses, right? In terms of what happens over there. So, for example, if you look at Book My Show, as per numbers in FY23, Book My Show did make about 12% EBITDA margin, and they were making about 100-120 crores of EBITDA on an absolute basis. We actually do not know in terms of what is the kind of EBITDA profile of Paytm Live. And for example, if this is at a break-even point or a EBITDA positive point, it's not going to have a big positive impact. But if at all they are making losses, this is going to have a big negative impact in terms of their console, PAT for Zomato. Because if you look at Zomato's PAT, we are estimating a number of about 1,000 crores in FY25. So if at all there's a potential loss because of acquisition of this business, this will have a near-term negative impact.
Okay, all right. Hi, Karan. Good morning. So we've spoken enough about Paytm as well as Zomato. What about Nykaa? Post their investor day and the presentation that they put out, what's your view on the stock? You've been positive even at lower levels, but at current reckoning, I think 185 odd. What's your view?
So I think Nykaa, we have an accumulated rating right now. We have a target price of 195. We believe that, in terms of the growth rate for the BPC segment, the management is very confident that they will be able to maintain the market share of 30% going ahead as well, despite competitive intensity from quick commerce and, other new players which are emerging in. But the problem for Nykaa is not the growth in BPC. I think the problem is the profitability in the BPC segment, because, we had estimated about 100 bips improvement in terms of EBITDA margin for the BPC business, which may not come because they will either try to, invest into A&P spends to drive more customer traffic, or, kind of invest in terms of discounting because of higher competitive intensity. So I think the problem there is that, and, valuations are not cheap. That stock is available at about 68, 69 times core BPC segment. And even after assuming that 20% earnings growth, I don't see a potential of more than 75 times core BPC business valuation. So I think not too much of upside there as far as BPC is concerned. But yes, some green shoots in the fashion business. The management came out to be very confident that, they're going to break even in the fashion segment by FY26. This is something, which is a very good thing in our opinion, because, in the last 4 to 6 quarters, we have seen fashion business performance being volatile. Losses have increased, come down, growth rates have been volatile. So now they've given a correct path and a guidance in terms of fashion business. They plan to grow this by about 35-40% annually in terms of revenue, and they plan to do a break-even by F26. So execution is the key here. So if at all, fashion business execution is the key, you will see fashion business kind of seeing a turnaround and a positive impact in terms of valuations. But again, as we speak, the fashion business valuations are not more than 10-15%. So the bigger delta will come from BPC and not from fashion, even if the execution is good.
Okay, just clarifying on the number on Zomato, which you mentioned, Karan. You said the revenue of the lifestyle business for Zomato, which is the entertainment business, right? That's what you called it, the Zomato Life business,
yes.
which right now is 400 crores. It will go up to 2,000 crores if the acquisition happens. That's the revenue implication.
Yes.
Got it. All right. Okay. Thank you very much. We'll have a more detailed call on this, indeed, if things fructify. Thank you for joining in today and giving us your initial thoughts.